Just all got silent, so I think you're good to go.
Okay. All right, guys. My name is Patrick. I'm with a company called Globe Life Family Heritage. I got the opportunity to come in and talk to you. Jeff Holman is a client of mine, so he said I should come in and show you guys just because the product that I have is awesome. It's just flat out awesome. So who's ever heard of Aflac Insurance, right? Okay, I mean, who doesn't know that? Well, I like to say that Globe Life Family Heritage, we're like Aflac on steroids, okay? We cover your income essentially in the situation where you have, with your hurt from an accident, you cannot work, diagnosed with cancer, you have a heart attack or stroke, or you end up in the intensive care for some reason. And any of those situations, we come in and we just cover your income by paying a direct sum of money to you that you can use for anything. It's your money, okay? So I know I don't have a lot of time, so I'm just gonna go through some of the benefits here and just show you how it would highlight.
Well, we're not close enough. Oh, now
Uh-oh.
it's doing weird things. Go to the left. Left, all the way left. Oh, rude. Okay. No, not rude on you, just rude on the mouth thing. You know what I'm saying?
You've been called rude before, like this.
Yeah. Let me move this closer. We found out that my mouse doesn't work if we're too far away. Yeah, how weird is that? We tested it, so it's a real thing.
Apparently we moved the
We moved it.
table here.
Yeah.
Okay, so who knows what your health insurance will cover, okay? Health insurance is gonna pay the doctors, the hospital, and the medical charges, right? Okay, that's what they're there to do. It's very important. What they do not cover is what we call those indirect costs, and those indirect costs can be your loss of income, all right, and savings, because if you have no income coming in, obviously you're gonna touch the savings account. Your living expenses, no matter how hard you try and how many times you ask them, your health insurance is not gonna pay your rent, or your mortgage, or your car. And then on top of that, insurance has its limitations between your co-payments, medications, deductibles, all that can come out of your own pocket as well. And if you have families and traveling for treatment is the best option for you, we want you to be able to do that, but obviously you gotta find somebody to take care of the kids. You're gonna have to get a hotel, food, travel, all of that can come out of your own pocket, okay? So those are just examples of the indirect costs that can affect you. So here's how we help. And I'm just gonna highlight this column right here. This is the Elite 8, okay? That's my top level and it gets you the most money back in benefits, all right? So anytime anybody has an emergency treatment benefit right off the bat, we're gonna pay you $400 for that, okay? This goes directly to you. Any diagnostic scans, an additional $400, okay? CT scans, MRIs, ultrasounds, that kind of stuff. If you are hospitalized from accidental reasons, we're gonna pay you $800 per day while you're in the hospital. On accidents, it's up to 180 days. So I really hope you're not involved in an accident that'll keep you in the hospital for 180 days. But if you hit that point, the math you've gotten $144,000 that we would pay to you. Obviously, it's gonna help anybody at any time cover any bills if all of a sudden $144,000 come in. If you do go over the 180 days, we're gonna do an additional $3,200 that we pay directly to you. As well as observation room benefit, we pay $400 to you. Ambulance on the ground, $1,200, in the air, $2,400, and then we cover every bone in the body. Fractures paying out up to $10,000 to you. Dislocation benefits paying out up to $6,400 to you, and then surgery, if you require surgery from any accident, we're gonna pay you $1,600. And then we're gonna pair that with 12 visits of physical therapy and pay you $200 a visit. So we're doing an additional $2,400 onto that. So you can just start to see how it really, in any situation, it starts to add up and you can see how all this money coming in will be able to make sure that anybody at any time can cover any unexpected bills, medical, or just their regular bills. Okay, concussion benefit for anybody that's got kids and kids that play football. I think about me. I played from junior high all the way through high school and I had 2 concussions. So I think my parents probably paid me $800 at the time. Coma benefits, should that ever happen, we're gonna pay $4,000 directly to your beneficiary. Dismemberment benefits, sorry. If it happens, single dismemberment is $20,000 payout to you, multiple is a $40,000 payout directly to you. And then that accidental death benefit, should it be bad enough that it takes your life, we're gonna pay your beneficiary $40,000 in that scenario, should that happen. And then we talked about travel for treatment. You know, that hotel room can come out of your own pocket sometimes, even if it's just going across the mountains, you gotta find somebody, someplace to stay. So we're gonna help cover the hotel costs and pay you $200 a night for up to 60 nights to help with those. Because obviously if you're there for 60 nights, $200 a night, that can add up to a lot of money. This is my favorite benefit for any of my policies, really. If you have a family, young kids, and say a parent dies from an accidental death on that policy, we're gonna give the kids each $20,000 so they can go to college. Just a little extra add-on that we like to think about, because if you lose a parent, even at a young age, or even in the teens, it's gonna affect you financially, it could affect your plans later on in life, and we don't want that to happen, okay? So just an added extra benefit of what we do, okay? Now, here's the best part, and this is what sets us apart from Aflac and any other supplemental company that you're gonna find in the country. We guarantee that these 3 scenarios will happen in 25 years, so this 1, 2, 3, okay? All right, the first scenario, you're never gonna use the policy, all right? You're gonna have it for 25 years, you're gonna be protected. We're not gonna have any accidents, we're gonna do no claims whatsoever, okay? That is fantastic. So based off the premium you're paying, if you never use that policy after 25 years, I refund 100% of the premium back to you in one lump sum. Comes right back to you, it's your money, and your coverage remains active after that point. The second scenario is our small claim. We have a small claim over 25 years, $5,000 over 25 years, not a big deal. We're gonna subtract the claim from your difference, and we're just gonna give it back to you what is left, okay? So you're still gonna get some money back, regardless of either way. The third scenario is our worst case scenario, and that is a large claim. Somebody's involved in a serious accident, maybe we're in the ICU for a long term stay. We help with a $65,000 claim. That's not a limit by any means. All right, so that's just example purposes. In that scenario, unfortunately, we're not gonna refund that premium back to you. Okay, but exactly.
Yeah, you're alive, so.
And if you've only paid 25,000 into that, and we pay you $65,000, all of a sudden you owe me 40,000. No, I'm just joking. No, you owe us nothing, absolutely nothing. All right. Unfortunately, we don't refund that premium. No. Okay, but you've made money there. I like that.
Jeff's on there. Jeff's laughing at you.
Jeff, you're already covered. You're good, man. All right, so that's what's apart from every other company in the country. And as a self-employed person, speaking personally, I'm also able to write off the policies that I have for my family every year to help me with taxes. So I think most of you guys are self-employed, right? There you go. If you wanted to pick up something to make sure you have some sort of protection coverage, this is a very inexpensive way to do that, and guarantee that you're gonna have some sort of income coming in should something happen. All right. Anybody got any questions?
I have so many questions.
Yeah, by all means.
Any money?
What?
How does the company make any money?
The company, that is way above my pay grade. In that sense, my job is strictly to focus on my clients here in the valley, and
Yeah.
we're on pace so far this year to do about $72 million in return premium. So,
Returned premium, so that's
Returned
money
premium.
you're like giving to your customers.
yeah, give it back to our clients.
I don't understand how, like, it's making any money.
Hey,
You're taking it into the business model.
Yeah, it just, something seems too good to be true, like, right? And then my other question is, is there any benefit for like pregnancy or childbirth or anything?
When it comes to pregnancy, I think also our ICU policy covers you in the sense if something happened as far as a NICU. Okay, my family don't do that. We unfortunately would have benefited from this policy greatly. At the time, didn't know about it. So in that sense, yes, but your basic normal stuff, no, not really, unless there's an emergency situation. Okay? Question, anybody? Okay, and this is obviously not the only policy we do, like I said, cancer can occur in 3 out of every 4 families, so you never know. Those benefits are pretty much Same, we do the first occurrence, pay you for your diagnosis, $6,000, cover your hospitalization time, ambulance trips, hospice service benefit as well, surgery, anesthesia, second surgical opinions, breast surgery, bone marrow transplant, donor benefit, radiation chemotherapy is $480 per visit. Radiation planning is $480 per visit as well. So just all those extra steps we think about, including health screening benefits on our cancer and our heart policy. So if you have to get yearly tests done, like most ladies have to get mammograms, breast ultrasounds, all that kind of stuff. If you have to go get those done, we're gonna pay you $240 just to go do that. Right? It's gonna help cover time that you took to go do that. So, and then we always cover the travel for the treatment on our cancer and our heart policy, cover your flight or your mileage at 2,500 or 60 cents a mile. And then we also make sure that a family member can go with you, cover their flight and mileage, and then again, cover that hotel cost as well.
I got a question for you to interrupt you.
Yeah, Jeff, go for it.
So, because I had this example of a client that he had some issues with his health and went to the hospital here locally. It was like 40,000. He didn't know what the bill was going to be. His name was Mike, and found himself in debt. They couldn't, and the way the hospital worked is you have to pay all the money up front. So they don't give you a payment plan, you guys.
Yeah.
So Mike came to me and needed a private loan, which I got him a private loan because he was not making his house payment. And he had a job and everything. And his wife worked at the hospital, of all things. Okay. But they couldn't come up with the $25,000. They had bad credit too, to add to that. So nobody would do a HELOC loan with them. And he only owed like 140,000 on, or 100,000 on his house. And so I got him a loan, and then he didn't pay the loan. Okay. So it kind of got, it just, because he had to go to the hospital again, and the hospital did not offer a payment plan. They wanted all the money up front, or you go right to right to collections, which was a local collections company, which I knew the owner of, and he's a wad. Okay. So no, he was. I went to him and tried to work it out. Okay, but they dinged his credit, and if you don't make your home payment, it really knocks your credit. Okay, and then it's a compounding effect, right? So the question is, let's say that I get sick, or somebody in this audience gets sick, and you have to go to the hospital, and you have this big, and they had insurance too, by the way. Okay, so they had insurance through his company, but this bill comes back more. Does this help make your house payment? That's a question I can't remember, so I just need to refreshed.
Yeah, no, this will help. I mean, depending on the situation, if it was an accident, like what we were talking about, yeah. I don't know exactly specifically what this person was diagnosed with, so I can't.
Heart condition. Let's say it's a heart condition. He had a heart condition.
If he has a heart policy with us, and that's exactly what sent him to the hospital, then yes, the policy starts kicking in. Comes in, especially if he's diagnosed with a heart attack, comes with that diagnosis payment right off the bat, $6,000. Okay, just to help. And then it comes with all the other benefits of being, if you're hospitalized, if you have to do physical therapy, you have to have open heart surgery, you have to have all these other things that come along with being diagnosed with a heart attack or any stroke, that kind of stuff. Yes, absolutely, this would 100% cover the house payment. We don't directly pay the lender. The money goes to the policy holder, and it's up to them. I mean, after that point, it's not like we say, hey, you have to pay your mortgage, you have to pay this medical. That's where we step back. That's not our job. So if that person takes the money and goes to Vegas, that's on them. But that absolutely, that situation, yeah, this policy would cover their mortgage.
So that's a specific policy then that you have to have,
right,
with this.
Mm-hmm.
Okay.
Yeah, because I mean, we like to specify it being the heart and stroke and the cancer, accident, and intensive care, because other than those situations, your health insurance is gonna cover, I'm not gonna say, most of it, I don't know what health insurance most people have, but your health insurance under any other circumstances is gonna cover a lot of that. And the bill be pretty minor, not thousands.
Okay.
But I think about, Jennifer, you and I have talked about my situation. The reason I went through this was simply because we had a child. All right, and that child ended up in the NICU. My wife was in the ICU, and it all kind of spiraled. Okay, so you just get that feeling all of a sudden where things just start to add up, and then even after the insurance that we had, there was still a $52,000 hospital bill. I was 26 years old. So at that time, you're like, huh, life's over. Okay, and all I did was have a child. So thankfully not diagnosed with cancer or heart issues or anything like that, but it was a pretty intense labor and birth story. So yeah, simply for that reason, we had to sell our house on the other side of the mountains. So Jeff, we've had this conversation. So.
No, so here's the funny thing of the story, since I'm around a bunch of brokers here, is so for about a couple years, I made amendments, like we would get paid, my private lender would get paid. And they got so pissed at me for asking, they listed the home with somebody else. So there was 3 years of trying to help somebody down the drain. And the really problem came from the hospital. That's what created it.
Right.
Because they wanted the full payment up front, and they were willing, they stopped making their house payment to make the doctor payment. And it's just, the moral of the story was kind of crazy, all the little things that can come up. But I guess that's just something I wanted to ask you that question, because I did not, that was a specific question I didn't know. So you have to have that certain policy.
Yeah.
For that. Okay. Okay.
Anyway.
Okay.
Covers it.
Okay. Thank you.
Yeah. Anybody else got any questions? All that is right here on my iPad. So what we do is 100% personal. So I'm able to sit down with anybody anywhere at any time. You tell me, you're like, I want to get all 4 policies. This is my budget. I have $150 on room, make it work. And it's good for anybody. So not just thinking about yourself, thinking about people that you sell homes to. I mean, why would you not want to share something like this, that ability to keep that home should something happen? Where in my case, the lady who sold me my home back in 2012, really showed me this policy, I would have, just because.
Yeah.
Well, for one, my mom has breast cancer survivor, my dad had a heart attack, so I was screwed on both sides. So that alone got me going. But like I said, neither one of those one got me. It was just having a child. So it's something as simple as that. Starting a family can put you behind the 8 balls, so to speak. So yeah, I would love to sit down and show you this process. Okay.
Yeah, and I'll, since I have your info, I'll send all the packets that you gave me and your contact
Yes.
info will go out to the whole office.
Yes.
So,
Anybody, anything that you guys want to share this with clients that you're selling homes to, I'd be happy to bring brochures by. Send you my digital business cards. Okay.
and it still covers stuff like even like my family has I mean, pretty much everybody's gotten skin cancer. So is there any,
Yeah.
it'll still cover it even if you have kind of a family history?
If you have family, yeah, no, there's no, the only way you would not be able to get yourself covered is if you have been diagnosed with cancer in the past.
Mhm.
If it was melanoma, sorry, cover you. If it's non-melanoma and you have been 10 years treatment free, then we can get you covered. Okay? But the heart and stroke, if it's happened, of course, there's no coverage. All right, so that's one of those ones. Get it before it happens.
Be healthy.
Be healthy. Be healthy, work out, but even that sometimes
Don't bite.
can still get you. I the other day, actually a client called me the other day. She said, 40-year-old husband just had a heart attack. So. You never know. He worked job daily. So it's like, okay, but you never know what. What was this?
No, I said I'm terrified.
I did not mean to scare.
No. You have no solutions, yeah.
No, this sounds great.
Just the opportunity to share this with you guys. So,
Yeah.
much look forward to and appreciate you guys letting me come in.
Thank you very much.
Well, thanks for your patience, taking so long to get.
Oh, absolutely, it's fine. Like I said, the summer was crazy, so I think it was pretty busy.
Okay, let me. Moving around. What's up, Jeff?
What's up? How are you?
Good, how are you?
I'm attending. I should get a smelly
Gold
sticker or something
star.
for attending.
Yeah, I'll give you a gold star, don't worry. That sounds fun. Me and Kelly were
All
gonna
right,
do that. I
good.
was saying we should get little stupid, like, first grade, like, good job, and like A+ and put it on your checks. Oh, all right. Michael, do you want to say some stuff?
Sure. Can you hear me okay?
Yes.
I can hear you. I can.
Okay, cool. How's everyone doing?
Actually, you're a little tiny bit muffled. Let me see if I can turn you up.
Okay.
Okay, I think you're
Good.
good. Yes.
All right. So real quick on something that Jeff mentioned, just kind of a tidbit. If you know someone or you have a client or you yourself are going to be late on a mortgage payment, I would always encourage you, reach out to the servicer or whoever you're making your payment to and see if they can do a modification or something, because as Jeff alluded to, having a mortgage late is probably one of the worst lates you can have. I just saw someone literally, he wanted to do a refi. He was at a 740 and he had one mortgage late, didn't even realize that it happened. And it knocked him down to like a 615. So all of a sudden he could no longer qualify, because once you have a mortgage late, not only does your score drop and you have a hard time qualifying on that, but now there's a special part in all guidelines for FHA, conventional, whatever it is, that state if you've had a mortgage late payment within the last 12 months, either you straight up don't qualify or it gets downgraded to an automatic manual underwrite, which then has its whole other slew of different things that are going on with it. So loan modifications can be a good way of doing that, or just letting your servicer know, hey, this is potentially going to happen. What options do I have before it comes to that? So then maybe you get ahead of it. Just a little something to throw out there.
Good to know.
The Fed funds rate, I'm sure you guys have all heard by now, that's going to most likely be low. I think there's a 100% chance they're going to lower it by 0.25% in this month in about 15 days on the 17th, 18th. Now, what ends up happening, and you guys can explain this to your buyers, or if you have sellers that are waiting, whatever it is the mortgage market and all the markets really are very reactionary. So what ends up happening is Jerome Powell comes out, says, we're going to lower it by 0.25%. The market reacts to that prematurely and says, oh my gosh, they're going to lower it. So then the bond market does its thing, stock market does its thing, and things start to trend downward. Now, what most likely will not happen is when the Fed lowers the rates on the 17th, 18th, that won't directly lower mortgage rates. And there's a good chance that the drop we've seen already has already occurred, because it happens prematurely to actually just based on. Now, when they actually do follow through, because this will be the first rate cut in a couple years, then that could mean we could see a slight decrease on this one. But moving forward, if there's going to be any decreases, if they announce that prior to the actual lowering, you probably see rates drop during that period versus when they actually drop. Does that make sense? That's what we've seen happen. Any questions on that at all? No?
Thank you for
Cool.
explaining it though.
Yeah, no, it's something that people are, I get clients constantly, well, the Fed's supposed to lower it in a couple weeks. Like, yeah, they're going to, but it's all reactionary. I mean, everything's very emotional based in this. So that drop has probably already occurred. Like I said, you might see a small, and then 0.25% when the market does move, it's not gonna, you're talking the rates themselves, unless you get a massive decrease. They're really, it's the points that you're paying to buy down the interest rate that are getting cheaper. Usually the move is not so drastic to where someone's gonna be able to afford it. This recent one has been quite a bit, so, but I don't see that continuing to that drastic. I hope they do though, because that'd be very nice for buyers and refinances for people getting into lower payments. So yeah, just some explaining there. Cool story. If you guys have anybody, I know Russ and I have talked about this a ton, renovation loans, and it's not just renovation purchases, but refinances as well. So right now is kind of a unique opportunity. Let's say you locked in over the last couple of years and your rate's in the 7.5%, 8% range, and you have some stuff that you want to do on your house. Could be a really good time if you have somebody that's wanting to update to do a renovation refinance, which is the exact same thing. You get a bid from a licensed and bonded contractor, but rather than purchasing it, you're just refinancing the loan. And in this case, you'll probably end up with a much lower interest rate. And then any of the work you stack on, there's a very good chance that your payment will still come down and you'll be able to put those upgrades into the home. So I have a guy right now who's actually a general contractor and he's doing the work himself, which is allowed in certain circumstances when they fit that criteria. He is living in a ADU on his property. They had bought the house originally to remodel it. He's running a little short on funds. He came to me and said, "Hey, what can we do?" I said, "Let's do a renovation refi. Let's finish your project on the primary home, and then you can move into that and then rent the ADU out and get that income that you want." So if you have somebody that's in that realm, it's not just on the purchase end, but it's also the refi. And that can go for anybody, really. That's VA, FHA, conventional, even USDA has some renovation programs. So something to note there. Last but not least, investor loans. We have all sorts of them. DSCR, debt service coverage ratio, bank statement. We do fix and flip loans. We had just talked to a local investor that just moved from the west side into the Kashmir area that's really interested in doing some fix and flips. We have those products. Asset depletion, and then bridge loans. And the cool part about going with the investor loan products is that it's more common sense based. And what's cool is you can actually combine some of them. So in this case, if you have a bridge loan and they've got $1 million in a 401k account that they're not actually drawing on, but their income's a little short, you can actually tack on asset depletion, meaning we basically give them income off of whatever their balance is, and then as if they were going to deplete it over a period of time. They can then use that to qualify for the bridge loan if they don't already, even though they're not actually depleting it. So it's like if they were to deplete it, here's the income, but they don't have to. So there's all sorts of creative things you can do. If you have a weird situation, just hit us up, let us know. We probably can do it. It's just a matter of moving all the pieces around to make it work. But that's all I've got today. Questions, comments, critiques?
Critiques.
Open.
No, that was good. Anybody?
Can you hear me, Mike?
Yeah.
Can you build an ADU with an enhancement refi loan?
Can you what?
Build an ADU with a refi using just from scratch?
Yep. And that's a good point, because there's West Side is kind of the leader in this, but we're adopting those new laws with ADUs. And that's kind of the wave of the future as far as not even just affordable housing, but using the property you already have to grow an investment even further and getting those. So yes, you can use a renovation refi for shops, ADUs. You just have to abide by local codes and laws, obviously. And usually it's like standard one is 50% of whatever that dwelling, the main dwelling is. You usually can't go over that square footage, but again, it changes from county to county. But yes, definitely.
I believe in 2026, when the local comp plans of the cities get under review inside the Growth Management Act, the government has overridden the Growth Management Act and will allow 2 ADUs on every property inside the city or the UGA outside the city in 2026. So you might have a guy with a house and an ADU, they're going to be given a hall pass to build a second ADU. that goes totally against zoning. And that's a derivative of the pressure for essential worker or affordable housing.
Yeah.
From the state government overriding the local government. That's a kind of a little secret that if you get out there to your clients and you package it with Michael, that's a value add to your clients to either get a listing, enhance a listing, get a referral from an old client. I mean, there's a lot of ways to work your database by using this kind of information. And I'll verify it because I'm going off of Chelan City, but I believe it's a statewide, but each city has their own, like Spokane, I know has already been doing some wild stuff with fourplexes inside of like single family resident zoning. Like it's literally crazy what's happening. And it's going to go full speed in 2026. So now's the time to start gearing up for that.
Well, and it's huge because people don't, especially agents, this can be such a, like you said, a value add to your own business and your knowledge source. But you have a client that's working with another agent that doesn't know these laws. Case in point, I just helped a buddy purchase a single family home in Marysville. And all these other people were looking at it going, oh, it's just a POS old house. And because he knew the local laws and what's coming, he's able to build a duplex and 4 ADUs on this thing and keep the single family home. So it's just the opportunity is endless. I invested with a guy on the west side as well. Well, it's actually on the east side, but he's from the west side where he did same thing, owned a house in Seattle, did a partial lien release on like a 4,500 square foot part of his lot that of his land that he owned. And it's already a small lot. He used that as collateral to then finance a new construction ADU. Now he owns that and can sell it separately if he wants, and he owns the property. So it's like the creativeness that people are doing and the opportunity is right for the taking. It's pretty cool. So yeah, I'll nerd out on that. I'll nerd out on that with anybody if you want to talk about it.
It's good stuff, Michael. Good stuff.
Yeah.
Thanks. Russ,
All I
can you
got.
say whatever you have about whatever you just said?
I'm sorry, what?
Do you have any materials or articles or anything about this 2020? It's in the brain. Okay. That's helpful.
Don't trust a word I say.
Okay, I was hoping to maybe send stuff
Google that.
to people.
I'm a salesperson.
It might be different tomorrow when you.
It might be different tomorrow. That's correct.
These are just lures to get you to dive in.
What video do you want first? Or do you want you
I think you
first?
do both because the first one's like 2 minutes and then the second one is just an elaboration of a sit down about the first
Which one is the first one? Is it the recession
I
one?
know that felt good.
Yeah, that's the
one.
first one. That's the
Okay. Thanks again, Michael. Good to see you.
Absolutely. Yeah.
Okay, let me share first and we'll see if it gets pissy.
All right, Ruben, this is your slide, so I'll let you explain it.
It says that based off of yields on treasuries, the probability we have a recession is at the highest it's been right now since the 1980s.
Okay, that's all well and good, but honestly, Gary, just tell us what's going to happen. Right. So we're going to give you 3 scenarios. So here's the first scenario. First scenario is unemployment is below 5% and interest rates fall to 6%. What's going to happen is home sales are probably going to bump. That's a very likely scenario, by the way.
Right now, that's the scenario most consistent with projections in the marketplace.
Yeah, which means that if you've been doing the work and you have the people in your database or you know, in your folders, if you will, that say when this happens, we'll jump, get ready to jump. Okay, this is most likely what would happen. So here's the second, and this would be what we'd call a normal recession, and that is unemployment bumps on up to 6, 7, or 8. Okay, interest rates begin to fall, meaning that the second the government sees people not having jobs, they take action. Just the way they did on inflation, right? When inflation went shh like that, what did they do to interest rates? Fastest climb in interest rates in history. You just experienced it, okay? You might actually experience something different again, and that is unemployment start bumping up, they're going to start dropping those rates.
That's a really normal scenario. We always tend to lead the recession, right? So we are already in our recession. It would be very normal for then a recession to start in the economy. The Fed drops rates. We start to improve before the rest of the economy does, basically driving the economy out of the recession. We're a growth engine, and the Fed knows that.
Last scenario, and that is we have a banking recession. And by the way, the commercial real estate industry might lead us into it. This is a wild card because you could literally see what's happening in the commercial real estate space. And if all of a sudden there's defaults, there's problems, most recessions are tied in some way to the banking industry, aren't they? The money industry, if you will.
But
right?
with the banking recession, they're not going to lend money even at those low rates, right? That's the problem, is they get super, super conservative about who gets a loan.
Well, they'll lend the money, Jay. They just won't lend it to as many people, which is they'll get tighter on it because they're afraid you won't qualify and then you'll default again because you'll lose your job next week. We would actually be very stagnant. We're already at the bottom. I mean, you're experiencing probably as bad as it gets. So if you're feeling pretty good about yourself right now, congratulations, right?
This. You imagine a guy who owns. I was just gonna say, this guy that they're talking to is the chief economist for KW in the world. So you can just imagine he's fairly intelligent. Of all the economists.
Okay, all right.
Interesting. It's not an exact science.
Thank you, sir.
Oh, hold on. Okay, sorry, there's your guys' face. Okay. Okay, hold on. Get rid of that. Thanks. This is going better than I thought. Thank you. Appreciate all of that.
It's school time again, and just like activity around that, the real estate market is buzzing. So we're going to break down all things real estate and dive right into the numbers. As always, Ruben, what's going on in the real estate market today? What are we going to talk about?
We're going to jump into, what are some more recent trends in the market and what are some scenarios? We talked about it a bit at Mega Camp. We're going to break it down a little bit more on like 3 important scenarios we think everyone should understand and kind of how to recognize them as we go forward.
When we look at that big picture, what's the most likely of those 3 scenarios that we might be running into?
So, I think Gary described it pretty well, the first scenario. So we'll kind of kick back actually to a clip of him describing it, and then we'll kind of like break down what it really means.
So here's the first scenario. First scenario is unemployment is below 5% and interest rates fall to 6%. What's going to happen is home sales are probably going to bump. That's a very likely scenario, by the way.
Right now, that's the scenario most consistent with projections in the marketplace.
So that conversation with Gary sounds positive. It's definitely bringing us into a better place next year than this year. It seems to be following along the lines of things are going to get better, but it's going to be slow.
Yeah,
Would you
so
agree?
This is sort of what the most likely scenario is right now. It's what a lot of the projections are based off of. That leaves room for home sales to improve, but not any kind of
Not
like
fast.
rapid
Right.
fashion, right? So that's about
Slow but steady.
4.5 million home sales next year, which is a good improvement from this year,
better.
but it's still, we're not back to 5, we're not back to 5.5 or 6 million home sales like what we'd like to be, right?
Right.
So in the long run, it's probably the best case scenario because it does the least damage to the economy. We get out of it, and then maybe 26, 27 is when we start getting back to like normal.
Okay,
Right.
good to know. And then the next scenario is definitely a little different than that, right? As far as the speed at which it moves.
And this would be what we'd call a normal recession, and that is unemployment bumps on up to 6, 7, or 8. Okay, interest rates begin to fall, meaning that the second the government sees people not having jobs, they take action. They're going to start dropping those rates. They will get very aggressive. Right now, if they can get to 6, 6.1, 5.9, anywhere in there, that's probably where the Fed is hoping they can go. Okay? But home sales, by the way, they would jump dramatically in 2025, folks.
So in this next scenario is essentially the Fed waited too long, and now there's an upward trend in unemployment that they have to get ahead of. They're going to start to drop rates more aggressively than they would in the first scenario. And in that case, we'll see interest rates probably falling to 6% or below much sooner. And that's going to lead to a better housing market in the sort of medium to short term.
Gotcha. So still not light speed, but faster than the other scenario. And maybe a little bit better news for us in the real estate industry, not as great of news for the economy overall.
Yeah, so there's a well-established historical trend in that with the housing market, which is we tend to lead the economy into recessions, but we also tend to lead them out. So the recession, if it does materialize, then as the rates are dropped aggressively, we're sort of the engine that the Fed is going to kickstart. We're so responsive to monetary policy stimulus, and we will then be potentially hitting above, back into the 5 million home sales range as we sort of drive the economy back out of the short recession.
So we heard number one, slow but steady. Number two, scenario number two really leads us in a good direction for real estate, maybe not so great for the economy as a whole. What about the third one?
So this is kind of the most scary scenario, right? This is 2008. This is the savings and loans crisis. Things Gary has, weathered through his career. So let's hear what he has to say about it, and then we'll jump back into the details.
Last scenario, and that is we have a banking recession. And by the way, the commercial real estate industry might lead us into it. This is a wild card, Rosie, because you could literally see what's happening in the commercial real estate space. And if all of a sudden there's defaults, there's problems, the banks are heavily invested in lending on commercial real estate. So anything that disrupts the banking industry, and interestingly enough, we were talking about this, most recessions are tied in some way to the banking industry, aren't they? The money industry, if you will. So again, unemployment could get really tough, right? It could head on up there to 7-8% or higher, right? By the way, I don't know the interest rates to go to 3 or 4, but I do believe that they would be bumping around 5, 4.9. And so what actually happens, you're sitting there going, wow, well, if interest rates were 4%, you guys, wouldn't we just clean up? Not in 2025, you wouldn't. You might in 2026. You might in 2027. But you wouldn't clean up next year if that actually happened.
In this scenario, something's gone wrong with the banking industry. We're in what's called a banking crisis. Financial markets have been significantly impacted, and essentially what happens is it's going to slow down lending. In the event we see, home sales continuing to fall as mortgage rates continue to fall, and we're hearing news that something's gone awry with banks, that's when we kind of know we're kind of in a potentially worst case scenario. Now we're looking at home sales dipping below 4 million for, potentially a full year or more. Unemployment's probably peaking closer to 10% than it is to 6 to 8, like we talked about in the other scenario. So this happened, in the 1980s. It was more of an extended sort of thing in the 80s with the savings and loan crisis as that worked itself out. Another situation where essentially falling home prices, weird practices in banking led to problems, and we had tons of bank failures. It happened again in 2008, right, with the housing bubble pops.
So we've seen it before.
Yes, this is not new. This is not an imagined scenario. We've been here, but it's rare. It's happened a couple of times in the history of our country.
Right. My hope is that we hit one of those first two, of course, and even if we hit the third one, then something else is going on, is what I'm hearing you say. Something bigger than the real estate industry itself, and there's not a lot that we can do to control that.
Yeah, absolutely. And still, the most likely scenario here is, we're transitioning into lower mortgage rates. They're going to come down probably slowly. It's going to be a bumpy path down as the Fed kind of feels its way through all of this.
Right.
And home sales will start to improve, but it'll be, slowly over the next many months, and probably more into 25 and then 26 will we see home sales starting to hit levels that we probably all would consider more normal.
Thank you, Ruben, for bringing such great detail and information that we all need to understand, not just for real estate, but as people living in this country who want to see it do better and want to be influencing things in the right way, I think all of our real estate professionals would do best by understanding this at a deeper level. Wouldn't you agree?
Absolutely.
I love it. Well, thank you as always. And thank you for tuning in and learning more about what's happening in your environment. Whether you're a consumer or an agent, you're welcome to come back every single month. We hope to have you. Don't forget to hit that subscribe button so you don't miss a minute of all of those changes and seeing which one of those scenarios end up happening for all of us over the next few months.
Do you need any more screen things?
No.
Great.
How many people got on Zoom right now?
4. Yeah, because 5.
Cool. If you all sit down one chair and Jeff, if you jump in the front row. Por favor, amigo, that is please. Friend. That's fantastic. No hablo español, es muy fácil. See our panel of judges?
Oh, shit.
We're all judging you. You all failed.
All right. All right. So before I get into these 4 assassins,
No, I'm just gonna do this. Everything.
I don't
Did
need
I
to
just
scream. We're
unplug
good.
everything?
We're good.
Well, no, this messed with the audio. Hold up.
You have to draw the box out.
What?
I'm gonna draw the box. You're supposed to stand and not move out.
We can't see anything on the white.
I want to talk to you guys about what you just heard, first of all. And what does it mean to, which one do you think is gonna happen?
That's what you think. I'm feeling like it's number 1 unless, I mean, who also knows? Because I know the election and all that stuff is coming up, so that's a wild shoot, but right now, I would say.
Yeah, I mean, that's what they say, right? Most likely. And just see, here's a politics is often a perception based on who you are, where you're from. But traditionally, we tend to survive. It does often put a pause in decision making because people that are making those decisions are maybe they're more emphatically in tune with their ideology, history. On one hand, Trump's going to take us to the promised land for America, and the same goes for Kamala. So depending on who you are, and who you're talking to, it's usually perception of reality is reality in the moment. Then about 2 months after that, what Americans are really good at historically, again, if you go doomsday on anything, all bets are off. So you can't, if we get nuked, real simple. We can't really, interact. So we can't really go there. So it's like, yeah, it's like, okay, well, that sucks. So we don't go, not that we're hardly still one day, then we have it. So with that being said, Americans have very short-term memory banks. 2 months later, life is back to normal for most people. Employed or whatever, you're a teacher, you're probably glad the unions are strong. You're not a teacher, you probably wish you didn't pay as much taxes and all this stuff. So at the end of the day, what that tells us is there's a market out there that's hesitating because of an election. There is a lot of unemployment talk. There is a lot of talk about, well, the reality is commercial real estate market in most cities is full. Not all cities, but most cities. Boise, Idaho, Nashville, Tennessee, Austin, Texas, they're doing all right. They've been growing like crazy. They still seem to be growing. Cities like San Francisco, Portland, Seattle, not so much. They're crushed. I mean, the entire skyscraper's empty. What does that mean? I mean, who knows? And then inside of that, what I would consider all of that talk is macroeconomics, which means the whole nation. What we have is North Central Washington is microeconomic. And we are a destination to, not a destination away from resort or area, right? So I talked to somebody last couple of days. I don't remember who it was. I said, probably talked to a lot of people last week. I said, who the hell was it? I said, I think it's my neighbor, he's pretty smart. What does Starlink, what is COVID, Starlink, Elon Musk, and that forced adoption of technology, now the technology at more efficient levels where people can, A, get approval from a board of directors or their boss to work at home more, maybe not all the time, but more. And now they know how to use the technology because it's easier because Elon Musk got 30,000 satellites in the air. And for $125, you got high speed internet. Where 5 years ago, that didn't exist. Okay, so if you think about 4 or 5 years ago, and before that, for 30 years, it didn't exist. So when we look at the demand side of supply and demand, which is another econ 101 concept, right? 1 donut, 100 cups. What's a donut worth? Right? 100 donuts, 1 cup. What's the donut worth? Different numbers. If the demand in North Central Washington, if we charted it on a graph, and then we added a new species of buyer, what happens? That we don't have any data on. So I'll give you an example in Chelan, which I know pretty well, and these 4 work Chelan this summer, last 2 months. Feels like a little longer than that, but it's 2 months. 3 days from now, it'll be 2 months. We always had second home buyers, investors, and retirees. Those are the 3 segments of a buyer pool in your database. You had a local buyer, but they were kind of priced out and have been kind of priced out for a long time. So what we used to say when gasoline was $2 a gallon or $3 a gallon or $5 a gallon is, I'm sorry, just drive to qualify. You buy an Entiat, you buy a Pateris, you drive to Schleck. So now we have this new buyer that's 30 years old, makes $250,000 a year as a headhunter for a Fortune 500 company that only has to go back to Seattle 1 day a week or 3 days every 2 weeks. And they said, you know what? I don't really like homelessness, traffic, gray skies. Let's give them some benefit of the doubt. 9 months a year, gray skies. Summer's pretty pretty. It's kind of pretty. So I'm not as dogging on them. Global warming. I'm with it.
Yeah.
Look trendy.
Sure. You're real trendy, saying you're trendy.
Uh-huh.
Wasn't for my boots, you'd think I was a hipster.
No,
Gen
no,
Z.
but that-
maybe.
Mm.
Okay, so that seems like hipsters with boots.
Yeah, they got pink boots.
Okay, whatever. So my point is, what if the demand, if this 30-year-old that has a family and has decided that fentanyl and homelessness and tent camping, on sidewalk camping, whatever that's called, traffic rain, taxation, they're done with it. And guess what's happening in Puget Sound? More people are moving in. There's more people that are okay with certain lifestyles. And then almost like the election, you hear a lot about woke movement versus progressive liberal, right? So a lot of our buyers are literally progressive liberals, but they're anti-woke. Does that make sense to you guys? So they're a Democrat, for example, they're working in Seattle, they have social liberal ideas, and they fall on the Democrat side of the ticket. But they're unhappy with how far it's gone. Just like a Republicans awful on the extreme is like a neo-Nazi, like extreme, right? Kind of the same thing. So, but that person that's been there 30 years is not what is there now, and they're unhappy with the government. They're unhappy with these. I can't get into my business. I worked really hard to get it. Now you're allowing 100 homeless people in the front of my business, and it's okay. And you're handing out needles, and it's like, So they're done. So instead of working at their office downtown and driving into the city or going to the east side, they're gonna go, I'm going to Leavenworth, I'm going to Wenatchee, I'm going to Lake Shore. That's a brand new species of a buyer that nobody's ever quantified. Because there's no data. There's really nowhere to go that I know of, other than just the last 2 years maybe. Because it took a while. I said this about 4 years ago. I said, it's gonna take a while for people to catch on. And how it's gonna take a while for us to see the data. And once we see the data, then we're gonna be on the development side of things. Oh, we need more houses. Because the last 30 years is no longer representative of the trend line. The demand is now spiking. And I used to say, not that long ago, I'd say in a debate, I don't remember who was debating either. But I would say, unless artificial intelligence slows down technology, this trend is going to continue. And it was a confusing statement to people because they'll be like, what does that mean? Because I'm kind of making fun of it. Artificial intelligence cannot slow down technology. It's quite the opposite. Einstein times Einstein times infinity, right? Like simultaneously. So with that being said, it's going to get easier and easier and easier to work online. Pretty soon we'll have holograms and whatever, right? Robots, and we'll be sitting on a beach. So with that, 60 days ago, thank you for coming, by the way. So 3, 4.
Ricky Cookie song? Yeah.
Hey, Jeff, hanging out, Kyle.
Okay. So let's put the spotlight on these 4 now.
Okay.
Now she got that.
I got it. Well, the audio, apparently when I go sideways, it's not
Oh, I
as
see.
good.
There's the people, so we kind of have to.
Oh, sorry.
Put mic up.
So I just do it like,
Yeah, gonna do it.
That's a
kind of just.
good looking crew.
Yeah.
Yeah, look at that.
All right, guys. So 60 days ago, I told you guys a couple things. Does anybody remember in the first 2 or 3 trainings, anything that I said?
Yes, we've repeated it quite often since then.
No, repeat myself.
Never, no, never.
Okay, what did I say? Name one thing.
Name one thing. What did I call it?
This will change your life.
This will change your life.
Yeah.
This will change your life, especially in real estate, forever.
You're gonna get more knowledgeable over these next 60 days than you will doing 100 open houses.
In the next 5 years, I'm doing traditional real estate in Wenatchee. Now, in hindsight, was that an accurate statement?
Yes.
So let's talk about what that means to you, because it could mean different things to different people. But, what I saw happening is people learned how to trust each other, learned how to help each other, and had kind of a combining strengths concept to achieve a common goal, even though we're individually working. Is that fair?
Yeah, could you maybe stand a little bit more that way? Wonderful, wonderful, love that.
And as individuals, now we're a team.
Yeah, and that's the idea when you work either in a team inside a brokerage or brokerage, working on helping each other on an open house, you start to become selfless. And the selflessness turns into energy that turns into something that's more positive in nature, right? More enthusiastic. Enthusiastic turns into, you're better at what you're doing because you're having more fun doing it. You don't just sit there behind a desk,
Don't make fun of my job. Skylar, we love you.
No, we need.
Watching friends on your phone. I know that's not cheap. So let's talk about some of the things that you've learned in 60 days. That's what I told her. Ted, you wanna go?
Things I've learned in 60 days. I mean, the whole buyers are liars kind of thing. So are sellers. What they say they want in the beginning, you gotta be flexible on that because yeah, they don't always know until their pressures change. And just even realizing going into this how flexible we had to be, that was so much more flexible.
Yeah, and Sid and I are co-listing agents on that. So we're dealing with the 2 people that started the project 5 years ago. Yeah. Yeah, for sure. What do you think, Nicole? What have you learned in 60 days?
I think I learned how to reframe every conversation I have in every scenario that I currently am having a lot of very quickly and adapt very fast. I like built that muscle.
Yeah, so like, would you say that that technique or that understanding of reframing objections or reframing conversations is gonna help you in everything?
Oh, for sure,
Not just in that particular project, but life?
for sure.
Somebody told me once when I was 19, the guy I worked for in real estate, he said, said every conversation you have, every minute of every day, you're selling them something or they're selling you something. We just don't look at normal conversations like that. But even if it's like, we're on the same page, but I'm gonna tell you my point of view, and we're in agreement, but my point of view is this, no, your point of view is that, we're having a conversation. So I'm really selling you and you're really selling me. And, whether it's flirtation or whether it's just charisma or whether it's just your business acumen or whatever it is that you're sharing, that's what this herd creature called humans do. So now you have seen it in that light, and it's now different, like, oh,
Yeah.
I see how that works now.
Yeah.
How does it affect?
Yeah, and I mean, we did like, I don't know, we've talked to probably like 300 people in the last 60 days and had full length conversations and how to do that over and over with different personality types. It's like an immense amount of practice within such a short amount of time that it's not like ingrained in you. Yeah.
Most of them.
Yeah.
Fire.
Learning how to adapt really well with other people's like personalities, like she was saying, like you just really gotta be able to match whatever they're doing, learn how to talk with them in the specific way that they're thinking and like try to get in front of whatever they're gonna say next is what I've really.
Yeah, so that, some of the sales techniques are called like mirroring and matching. And mirroring and matching works fundamentally because people like people that are like themselves. I mean, that they tend to get along with you. And so if they talk slow, you talk slow. They want to, whatever, it's just like they're comfortable faster. And that works. We don't really think about it in a market like Wenatchee, East Wenatchee, where you might be in an open house and the people live in the town in which they're buying. It's a little different mindset, but in reality, if they walk into an open house and you have never met them, the same basic concept applies. There's somebody staying in a timeshare on the lake. They walk over to see a condo. You've never met them. They've never met you. So how do you adapt quickly? And I think you said something very interesting that's so true that I love. Getting ahead of the objection. If I know what you're thinking. Now, there's a Mel Gibson movie once. You guys remember where he read the mind of women?
Oh,
such a
yes,
good
that was a cute movie. I actually know that reference.
I still foggy.
Anyway, he got
What
this-
women want?
Yes,
There you go.
okay.
Yeah, and anyway, so like in sales, if you had the same conversation 1,000 times, you kind of have an idea what the objections are going to be. There's going to be half a dozen objections. We know what most people are going to say. There's outliers, of course. But when you can get ahead of it and you can answer a question that somebody's thinking about while you're talking, they're going to be like, I was thinking. I'm smart. They don't know that I did. Then you have to give them a win. So then they'll say something else, and now you'll have them on the reframe, you'll have them on the right track. And the goal is to get them from where they start to where you want them to be. And you have to do it with integrity, or you're a scumbag. So if you don't like what you're selling, then it's a different game, right? You're unethical. But if you like what you're selling, you believe in what you're selling, and if you don't, they shouldn't be there selling it, right? You should say no to that problem. I unhired a client. I wouldn't say I fired a client last week, but I unhired him.
Not downsizing, you're right sizing.
I was like, this home cannot sell for more than this money. And I had brought in like 2 or 3 offers and they refused to listen. And I said, look, this is a waste of everyone's time. I don't believe, so reframe, I don't believe I'm skilled enough to sell your home. I would recommend you hire somebody with a higher skill set. So I'm talking to an attorney now. I'm like, so I'm gonna let you out of the listing because I believe you deserve the right to hire a person with more skills that are suited for your place. Now, because I was done beating my head against the wall. Now, I wanted to help them. I went to high school. I wanted to help. I cared about them. This is all they have in the world. I get it. But they were delusional in my world. Maybe the next guy will sell it. Could be just timing too. I could have been more patient. I could have been, but at the time, there's a line because if I don't believe in it, then I punch out. I'd rather not do it. So when you're interviewing people, just like if somebody's a jerk, you know, we saw a couple of them. Ironically, I don't think we saw that many, or you guys saw that many? Maybe like half a dozen,
Yeah, maybe.
out of 800, 900 showings, 1,000 showings, 8 or 6 or 7 people, most of them wasted, right? Like all fired up. Well, you guys handled it, right? Professionally, but you wouldn't have to work with that person because we're interviewing them at the same time they're interviewing, right? Not 50.
So coming into this, I thought it was a real estate game. It's definitely a psychology game. You know, the condos don't matter. I think it's important to be the subject matter expert in whatever it is that you're showing. But, you know, whenever someone comes onto the lot, they're missing something in their life. I think it's up to you to figure out what that is.
Yeah, well, yeah, they're on the lot, hence they want to buy. They want to do something, you know, and maybe buying this isn't the right move, but buying something, and there's a gap, and if I can become an allied resource for that human or their family, then there's going to be a value proposition in there somewhere. And if they're not a buyer today, that relationship starts today. And so this is going to be the big challenge and this is the big challenge for everyone. This is the FU of real estate, which really is it a goal to follow up, or is it a system to follow up? Because everybody has goals. Every broke person on planet Earth has a goal, but they're still broke, and they often remain broke. Those that focus on the system, not a goal, tend to not remain broke. So in a follow-up, it's not the goal to follow up is nice, but what's the system to follow up? And when you focus on the system, it's like working out. If you focus on running a marathon like Yesenia, where's she at? She runs a marathon, all right? Single mom, 2 kids, runs a marathon. Full-time nurse, full-time real estate broker, runs a marathon in spare time. All right, interesting. So if I tried to run a marathon right now and said, I'm gonna go run a marathon today, well, I'd be incontinent. Cindy would have to be helping me.
There you go.
Because I'd be like interaction. But if I focus on today, I want to run a mile, 2 miles, and I'm going to do that until I can run 3 now. Then, you know, it's a system. Eventually, we know the system will lead to a conclusion. That's ultimately the goal, which is cool to have. But what happens is we think about the goal, and then we think about the goal as, okay, well, I'm going to run a marathon. Well, I didn't run this week. Well, might as well go to McDonald's. I am now disheartened. So when you have these relationships that you started in the last 60 days, think about it everywhere. It's like any relationship anywhere. That is the start of something beautiful. And no is just the first really word in a great relationship. Because really just means not right in my world. I translate it for you. But if I got your info, that's the goal. I had this conversation with one of our agents, not really one of our agents anymore, but he had like 1,000 words on his card, 1,000 words in his own personal business ad, like so like small that you couldn't, couldn't read it, like even with magnifying glass, it'd be hard to read. And I said, to your point, Justin, it's a psychology. We're not trying to run advertisements to sell anything. That's a common mistake people make. In fact, most of your uneducated yet very confident sellers, to your point, would like you to write a book and put it all over. The billboard, social media, whatever. Thinking that their product is what we're selling. But it's not. What we're selling is a fulfillment of the gap. When someone's on the lot, hence they have a gap. Someone's in an open house, hence they have a gap. We're fulfilling that gap or lifestyle. We're just using that product as a vehicle to achieve it. So if I tried to run an ad on social media, and I was like, I told him, I was about Arrow, right? Agent referral opportunity. And I was like, this is what Arrow is. And I said, how about 25% of the commission, 5 minutes worth of work, call. If I write a book about agent referral opportunity advantage company, they're gonna go, oh yeah, I got enough information today to make a decision today, a final decision today. Instead of, all I want the ad to do is get the phone to ring, or get the email to come in, get the text message to come in. So then we can do sales with this thing called talent through practice. Now, what's interesting to me watching you guys all work is you have this thing called work ethic. That's what I saw. 60 days of work ethic, which is such a rare commodity in our real estate world. Like if there was one thing I could say that is I never thought would be something, and there's a lot of them, you know, I'm old as dirt, but I never thought that people would say, nah, today. Just too hard. Like, really? Like, but you do know that that leads to your truck getting repossessed, or you going to jail for not paying child support, or getting kicked out of your apartment, or foreclosed on your house. Yeah, well, you know, just, I don't live to work. I work to live. No, I need a work-life balance. I'm like, that's great, but alternatively, you have no options. So weird. I never thought that would be normalized. And I'm not judging it, like, it's just a different thing, right? So in my head, that's the opportunity. You ever heard the joke, or what is it? What do you call it? I don't know what it's called. Fable or something? In a land of, have you ever heard this one? In a land of blind people, the one-eyed man is king. In a land where everyone has, like the vast majority of people decided to not work, and this happened coincidentally about the time interest rates jumped. And coincidentally, that low rate lasted a long time, probably 10 years, 10, 12 years. So if you got comfortable thinking that you were a professional, and really what you were is a good network, like you have good family connections, you have good friendship connections, you're likable. So real estate was a great game because you just be like, hey man, I'm gonna go to the bar and go to the church and hang out, and I'm gonna get a listing, and then I'm such a good listing agent that it's gonna sell, and then I'm gonna go do it again, and I'm gonna make 100 grand a year, and then one day, 10 years into your career, like I was thinking about this with my kid as an audiologist, like if 10 years into her doctor of audiology career, she realized she didn't know what she was doing, that would be hard for her to swallow, like, but I'm the best at it. She's the #1 audiologist in the entire county where she works. It's the #1 clinic. It's not even close. She's like 3/4 above everybody else. But if I had to tell her one day as the owner of the clinic, you don't know what you're doing, that would be a tough psychological blow to her, because she would have thought she wasted the last 10 years, which is not the right way to think about life, right? Because education is perpetual. It's in perpetuity. You never can stop learning. I mean, literally, the only thing I know for sure is I don't know very much. And the more I know, I don't know very much, because it's like shit. When I was 21, I was brilliant. Literally was. You could ask me. Legend in my own mind.
We know what you look like at 21 too.
That was coincidental, man.
That was
It was the coolest thing ever. It was so cool. I saw your name and I was like, no, it fucking isn't. And then I was like, oh my God, it's Frogs.
Did they just have that out, like on the
She
table?
just
No,
brought
she
it out. So she was like, we have, because it was the very first home ever built on the point, like ever. And
I
so,
told you guys I built a chimney, huh?
yeah.
Yeah, and your name is on it.
Yeah, you put your name in it.
I did.
Yeah, that's how she saw you. She's
That's
like,
how I saw it.
that's Russ's name. What?
And then like a couple pictures later, I'm like, it's
Can you explain to me and Jeff what
So the-
happened? Cause I saw the text, but I don't know what any of this.
There.
Yeah.
oh God. All right.
Oh, story.
We were at, so Yesenia was trying to get a place for the wintertime because she's a nurse, right? So she's working up in Chelan. So she works 3 days a week up there.
Mhm.
And she's like, I want to get a place up there
Mhm.
to be able to just stay and not have to come home.
Yeah, makes sense.
Yeah, especially because it's coming to be winter later on and she wants to make sure that she has a place. So a lot of the people out there will do like fall, winter rentals and then they'll have them as short-term rentals in the
Oh, is
summertime.
this the dude that his house is listed?
Yeah,
That
that,
was
this
maybe
is where we
wanting
got
to
the
rent it?
idea from.
Okay.
Yeah, but then there was these party people, which were really fun.
Oh, hello there.
Hello.
You do the fun classes.
Yeah, I do.
Nice.
And you guys are having a fun class right now, right?
Yeah.
What are you learning?
I forgot your name.
DJ.
That's it. DJ Hen.
That's
Hi.
impressive. You got my lesson. What are you guys learning?
We're storytelling.
Yeah, we're
Storytelling?
storytelling right now.
Yeah.
Can I interrupt you a little bit?
Oh,
Fire away.
100%. Yeah.
I'll be here not this Thursday, next Thursday. And how many of you still need to take court?
Yeah.
Okay.
We did that last minute panic thing.
That's going to that. Yeah, tomorrow, next Thursday, not this Thursday, next Thursday at Cordell near. I'll teach the court class, but I turned it into a Jeopardy game show. I call it Court Party. So rather than me lecturing you, it's a chance for you to prove that you know everything. Okay? So it's $30. That's in the morning. In the afternoon, I'm doing the fair housing class. This is a fair housing 3, so it's one of them that's required for your renewal. But we do the first part of the class is reviewing fair housing, and then we finish the class with Family Feud style review. It's fair housing feud. It's in the afternoon, so morning session, afternoon session. And if you need a motivation to help you perform and close those sales, I'm doing a cruise in March. And you get to go on the cruise, and on the days at sea, we're gonna do continuing ed. And the days at port, we'll have events and other stuff to go to. So if you have any interest in that, get on my newsletter and start getting up to date on all the information and stuff. I am offering a promotion for a free ticket to the cruise. You gotta sign up for my newsletter. So you gotta put up with my emails that you might win the ticket for you and a guest to go on the convention. So here's the flyer for that. Go to my website, find me on Facebook, follow me, you'll find the link to the cruise promotion. Okay?
Thank you so much.
Thank you for letting me.
Yeah,
interrupt.
you bet.
Appreciate it. Awesome. Hope to see you guys next week.
All right.
Thank you.
Rest of it cool. And I text you, you can show them the picture, you can text you the picture.
Oh, yeah. So you ended up at somebody's house and like randomly found a picture.
Yeah, so
Of us?
we went to the beach and started inviting people, right, to come and see the open houses. Well, Yesenia went to this big old group of like youngins, right? They were having a great time.
Yeah.
And then they came up because they were like, free alcohol, hell yeah.
Yeah.
Nicole takes them out. She's the closer, right? She's like, all right. Because one of them owns a house on the point and she
Yeah.
had talked about that. And so Nicole was like, well, have you ever thought of renting it out in the winter time? She's like, no, I've never done that before. I only do the summer and blah, blah, blah. And we realized she's renting it too low. Yeah, we're helping a girl out. And so then she comes, we go, she's like, yeah, come over later. And so we all went. Yesenia got to go see the house. We all got to go see the house. And then she starts talking about the history of the house. And she's like, I had these pictures. And I was like, fuck yeah, I want to see the pictures. Like, that's cool, you know? It's weird like that. I like to see stuff like that. So then she brings up the pictures. I start going through them. And the girls are like talking and I'm going through and I'm like, oh my God, it's Russ. Like I just see Russ's name and I'm like, okay, he's gotta be in here. And then like a couple pictures later, he's in there and I'm like, well, all right, well, there we go, little blonde boy, skinny blonde boy.
I was 18,
Oh, that's
right? He's got the year of 1988.
1989.
You were very
tiny
in 89.
Yeah, he's like this big.
Yeah,
he was very skinny.
yeah, I'll let you watch football highlights one day and you're like. "Dang, he
Please, I
was
wanna
tiny,"
watch
as my
those.
kid said.
Yeah.
My dad always said, man, you were little. That's not the reaction of.
Did you say that's why I was so fast?
I was fast. I was definitely fast. I was crazy.
The wind couldn't even catch
Weren't you making like $7 an hour that summer?
Mm-hmm. I went from there making $7 an hour for Bethlehem Construction Building Warehouse. Hotels. And before that, 16, I worked as a roofing guy for like $6.
That was not a good job for you.
Yeah, I got a score to prove it. See that? That's hot tar kettle operator right there. Got the tar went, it was 500 degrees and boiling. It was really good.
That's in your face, yeah.
He's in the moneymaker.
So, yeah, so we learned some things. And now, with those same skill sets, here's what I saw. I saw the first, I want to ask you, the first day, July 6th, and that weekend, we had how many showings?
Like 400, probably like 400.
400 showings in 8 hours, over 4 hours. 800 showings. So when I said go, you guys had highs that were pretty big. And you were taking like 6 couples at a time and
Yeah.
not really knowing.
The renters having lunch, it was a hot mess.
It was a hot mess. And so from your own, like, we had like 3 or 4 meetings before that, right? We offered it to everyone, and everybody has a different life, right? There's no judgment here. And then there's like 10 or 12, and then there were some rules that came with it, referrals back to me and all these things that I put in place because it took 25 years to get that deal. 6 or 7 of you stuck it out. That's about right. I mean, everybody has their own business. Again, it's not judgment. But what could I have said, if anything, now that you've lived through a summer in Cheyenne on like a $10 million project or more, I guess, way more now, like $30 million project. Yeah. What could I have said differently to, if you were going to talk to somebody that decided to not do it, that I didn't say? Does that make sense?
To do it, you mean?
Yeah, what would we have told them?
Yeah, or what would have been more accurate in sharing? Because if you guys said your lives will never be the same, that's a pretty big statement.
Yeah.
And that's the idea of doing this company and companies like this, is trying to help people. But if I could articulate it more accurately, now that you know what it is, what would I have said differently?
Trial by fire.
Trial by fire.
Yeah.
That would have scared people away.
But I think you needed it. Yeah. Like that's the grit that we needed. I feel like that was eventually communicated to all of you and you were like, okay, I'm in. I'm here for the trial by fire.
Show up, do the work.
Did you guys feel like it was fun and didn't really feel like work?
Yeah.
Yeah.
Yeah, I felt like the only work was like, oh, I gotta drive, but that was it. When you're tired, but that's it, you know?
Oh, yeah.
But there.
Seeing, I saw like, okay. What's going over here? Nikki, James.
Immersion therapy.
Yeah. But otherwise, yeah, I would say, I don't know, the first thing that came to mind was, like, if you want to have the skill set or start learning the skill set to be recession proof, that would be what you should do.
And here's the challenge. It always starts, when we're judging something as humans, we have a bad habit, especially if we've had it pretty. Yeah, well, we jump to a conclusion. So instead of, again, jumping to the process, we jump to the goal, we jump to the conclusion. So one might say, well, there was a forest fire and tourism was down 30 to 40%. And, you know, the units aren't even gonna be ready to see, so we're not really gonna have access to them. And the ones they do build, they're gonna rent out and not let us see those. And they're 3 months behind, so we basically are gonna go all summer without seeing anything, and therefore, we're only gonna sell $6 million worth of condos. So, some of us aren't even gonna have any deals. You see, that's negative. That's jumping to a conclusion. Or, you know, that drive. I know it's along one of the nicest rivers in the world, with the sunshine.
City goats all the time.
Wildlife. But, you know, I don't, you know, I always think to myself when people say that, wait a minute, it's 36 miles. And there are people, I had my buddy, Matt Ross, who's been my accountant forever, drove from Everett, to Tacoma. Twice a day. In Russia.
An hour and a half to get to work.
Yeah, and that's very and an hour and a half is common, and you go 20 miles, 10 miles, 5 miles.
It was like 15 miles.
But those same people that have done that come over here, and I've seen it, and they get used to it, they get comfortable being comfortable. They're like, oh, I gotta go. Actually, but they just spent 25 years, like, oh, that's nothing in the beginning. That's a beautiful drive in the beginning. But it's a good example of how we get just so like comfortable being comfortable that we start becoming judgmental.
I'm a perfect example. After moving from that over to here, and I got used to the no traffic, it's like, I really don't want to drive across that bridge. Yeah, and it's 10 minutes. Yeah. I usually did an hour and a half one way to work for here. I feel you.
Yeah, and here's the funny thing about opportunity cost, which is another economic term, which means I'm gonna eat at McDonald's, I give up eating a burger. So that's my opportunity cost of burger. What fascinates me about real estate brokers in general right now, besides they don't want to work. And they don't have any, they're not winning. In fact, they're losing rapidly. Now, I used to say they're losing so slowly, they still think they're winning, but now they're just losing. That given an opportunity to excel, it's so foreign to them because of you. That comfort is a contagion. In fact, one of the favorite quotes that I just read not that long ago, I don't even know what book it was, said, the condition for the need for certainty is a very dangerous emotion in your life.
Wow.
And that's what happens when you get comfortable. If you don't put yourself in trial by fire and choose to try to do that daily, it's human nature to fall back into what you know.
Yeah.
I mean, think about this. My wife does this a lot. When she's like really tired or exhausted, she'll go watch, I call it Harry Potter days. Now she's watched Harry Potter, I think like 50,000 since it's probably since day one, who knows. But she loves it because she doesn't have to pay attention to it. She can just veg out, and she likes to, when she gets exhausted, she likes to just chill. Maybe right now, after 4 days of being in bed, she's ready to not watch Harry Potter. But that's kind of her go-to rather than watching something. And I do the same thing with like Star Trek, whatever, right? Some goofy thing that I like.
The no-brainer.
So it's funny that as a human, we tend to want to be comfortable. But we all know that that comfort zone is at best instant gratification. And the only thing instant gratification is good at, other than making you feel good for a few minutes, is assassinating delayed gratification. That is the kryptonite for delayed gratification, which is where all the cool shit lives. Achievement, self-esteem, self-confidence, charisma, where you're like you got it now. Like now when you're talking to somebody, they're listening to you because you know what you're doing, because that comes from within. And the only way to get that is trial by fire. Now, what is dangerous is we get some success like we did for 10 years. And I'm talking about the industry. I'm not talking about individuals. But it goes back to that. The reason I'm saying this is it goes back to that. If everybody's blind, you have one eye, you are the king. In the land of the blind, and you have one eye, you're now the king. If everybody's work ethic is down even 50%, there's never been a better time to kick everybody's ass. I mean, take it all. literally just take it all. It doesn't happen very often. There's a couple times in my career. It happened early in my career because of the 1986 SNL failure, Michael Milken, is what they reference. And it happened in 2008, in the Great Recession. There were opportunities based on this bloodbath that were occurred, not because of the people though, because work ethic was still there, but there were other things that made it so hard for so many people. And my son actually surprised me because he does that once in a while. He was telling me a story. We've been working together, like it was maybe yesterday. And he said, yeah, Russ, somebody said they wanted to be like you. And we were out having beers with them. And your dad's like, oh, he's been around. Oh, he's cool. Oh. First of all, my son goes, first of all, I know you. You're not going to be like him. And he goes, what do you mean? You know, young guy.
Who is he talking
Because when I lived with him every other week when we got a divorce during the recession, he got 4 hours sleep on maybe less a night every day. He worked every day. And I knew this because he was sleeping on the couch in the office, in the front of the office, and I was sleeping on the couch in the back of the office, and at 2 a.m. I'd hear typing. So do you want to do that? Because that's all it takes to sell this. Now, that's in his mind. He went to be in the Marine Corps for 5 years. He's done his own things, right? But it was funny to me that had an impression on him. That he saw work ethic up front and close and living on a couch in an office because I couldn't afford a house and an office. So I was like, well, that makes sense. Just get an office. So that's my natural, just work. So now that that's not a natural behavior for a lot of people, it's a beautiful time to work. When everybody else is resting, because here's what happens. Man, summer was so busy. Oh my God, I worked so hard. I deserve a break. No, you gamify this thing and you turn this business into a game. It's not life and death. Like no career is life.
Right.
It's a game. Well, for some careers. Take that back. For some careers are life and death. This one's not one of them.
Thankfully.
In most cases. Speaking of that, we need to do a firearm safety course for everybody. That'd be fun to do. Firearm safety course.
Oh, fire.
Learn how to shoot pistols,
Yeah.
have concealed carry, things like that. Because it is a dangerous job. We shouldn't be minimizing that. My point was like, hey, look, if you gamify it, like any game, you have highs and lows. The football season coming up, there's 4 quarters for a reason. There's a halftime for a reason. It's not really how you start, it's how you finish. Well, the people that take it seriously in the game and the preparation before the game, like you all are doing right now, are the people that usually win the game. Not always, but usually. Tom Brady, you guys know Tom Brady?
Yeah.
The greatest of all time, won more Super Bowls, like 9 out of 7 out of 13 or 23 or whatever the hell it was, some crazy number. He was calling I saw a documentary with him or something. I saw him on TV work his new job as an analyst. And he was talking to this dude and he's like, yeah, I mean, Belichick put us in a great position because no matter what the defense did, I had to play for it. And even if they started trying to hide they all tried to hide their defense, what they call in the defense. So if I called a run or a pass and they had a pass defense, then I could check to a run because they had gaps. But they got really good at doing it right up until the play clock was, I had to snap the ball. So they were still moving around, hiding and camouflaging their play. But there's this one set he was talking about that there was a 7% chance he didn't know what to call. One set, 5%, did you watch it? Yeah, 5% chance. I was going to do that. I'm a salesman. So 5% chance. And he said, that's not good enough for me. So out of 500 plays they could call, and I had 500 plays, there was one combination of things that gave me 5% I had no answer for. I couldn't check to the right play. That was unacceptable. That's why he's the best. Because he didn't throw the ball as hard as some, he didn't run as fast as others, he wasn't as tall or big, He had this. And the people that have this in today's market going into this, we're in it, we're in the soup right now, the recession soup, but it could get worse. So here's the thing, I don't want to talk forever today. A shift, like going from one market to another, is about more. It's not about more hours. It's about more of doing the right thing in the right time. So if you took just from 3% to 7%, now we're starting to drop again, right? So that's the perfect opportunity. You might have heard Gary Keller said, in that most likely scenario, if you have a database, if you go engage with that database and you spend your time lead generating your database, which includes, not creating new leads, it does include that, but it also, more importantly, includes talking to people you already know about what's about to happen. The anticipation, I'm going to say something here that I've been saying a long time. I don't even know if I said it to you. The anticipation of success and improvements in my life is much greater than success itself. I love football. Like, I would have done a lot of things, like professional, like a lot of things. The best day of my football career was my senior year, the first double day in the summertime, getting in shape. The worst day was when we lost by 2 in the Tacoma Dome to go to the finals. Not because we lost the game, but because I would never play tackle football. That was very, very, very problematic for me because I love that game so much. So I gamified real estate. Like, it's kind of the same thing. Thrill of victory, agony of defeat, got to call new plays. Everybody's got an opinion. But right now, if you shift your mindset, and this is what people haven't done, where we were just focused on writing deals and showing houses because the interest rate was 3%. There's the vast majority of people that haven't shifted to lead generation because they didn't have to lead generate. The financial markets lead generated for them. All we had to do was show people and go get listings. The sales happen automatically because of the market. We, unfortunately, meaning the market, the industry, started adopting that as a skill set. Like, I developed my skill set for 10 years. No, you didn't. You say exactly the same thing. Now, some people went like this, and Kenny's a good example, right? A lot of people weaponized and gamified that business and now transitioned successfully in that business. A lot of people haven't. But right now, it's back to lead gen. And lead gen means get hold of your people, tell them what's about to happen. And it's not that rate, like Michael said, the rate's already built into it. We've already experienced the rate cut. What we have experienced is that most people don't know it's already built into the financial market because of the futures market. Without getting technical, they just predict what's going to happen. And the only thing that goes sideways if they predict incorrectly. Now, nobody knows for sure, but your buyers don't know that. Your buyers have no idea that it's already built in. So you go tell them, it's time to move. And even because of that, the rates will probably, because of what most likely will happen, is a combination of those two. There's going to be some commercial banks go under. There's going to be some areas of the country that have 6 to 8% unemployment. And there's going to be the most common, which is probably 5%, 6% unemployment. Either way, rates are going to be doing this every quarter for a while. It's just how fast, right? And if we're a destination to market, not a destination away from market, we're not selling coffee. We don't need to be a crip or blood. Or Centennial or Nortennial or a skinhead. We don't have to be any of those things to sell real estate like we would in common. Yeah, it's not true. Really loud. You may get the joke.
I did. I just got it.
Often in Southeast LA, you have to be a gangbanger to live. That's sorry. I think easy. So I had to stop using that joke.
Are they around still? I don't even know.
So here we live in a beautiful place, right? So we don't have to sell the area sells itself. And this is the last thing I'm going to say. I said this to you guys. This is not about a project. It's not about a condo. I said it to your point, to the developers. And they make some bad decisions. I said, this isn't about your nice condo. They're not going to sell it. That's a blow to me. What we're selling is this nice. And that vehicle is a very nice vehicle to obtain. So you did a great job, made our job easier, but it's not the brand. Remember, our brand is North Central Washington. Our brand is Sunshine. Our brand is less fentanyl, less homelessness, less violent crime, less taxation, more recreation. These are our brand. 4 seasons, 8,000-foot mountain peaks, 300 days sunshine, rivers and lakes and mountains and streams. That's our brand. Everything else, we just drag it the buyer pool with the brand, and then we find the vehicle which suits the perfect individual, whether it's 20 acres in Badger Mountain or a condo on Buffalo. But no matter what, nothing is going to work for anyone if they don't reach aggressive and consistent, and not more hours in the day, just more accurately spend your time on things that move the needle. So for the fourth time, I'll say this, the last thing was, today, I want you to analyze your business. I want you to know trick, but it works. I want you to decide one thing that you can stop doing that is related to your business, that if you stop doing it, the business wouldn't notice you stopped. And then I want you to pick one thing that by doing so, you start doing, it'll move the needle. All in your database, might be a good start. They're the easiest to convert.
Then just email, call,
Yeah,
and
I mean,
call.
it's my biggest regret. That I love to hunt. I love to quest so much. I didn't work people already. Nor hire people to do it. I mean, I just literally sacrificed millions of dollars because I didn't enjoy them. And that's about as you can get. I do something that's way harder and way more expensive for 30 years than actually focusing on a database that I built for 20, 30 years. It seems like that would make more sense. That's how I'm at. Look, the only thing I know right now is I know very little. Any questions?
It's a good ending. Yeah.
I just want to say good job for that whole group of doing that. Really good job for all you guys going up there, making the drive and sticking it out. Everybody but Justin. So
Thank you, Jeff.
I mean, where else can you get buyers drunk and then sell them something and ignore their call for many days till they close?
Is that your strategy? That's what you've learned over 20 years.
oh,
Mhm.
that's great.
And it's the 3 to 7 beer mark, Jeff. You know the guys that we worked with in Chelan, that was a mandate. I re-implemented it because it was Indie Land. There's no rules. There's no L&I or employment security. So I just
Man.
daily.
You know, I tell you, it's so true, Russ. There's so many people trying to be the predictors. I mean, I had a busy, I didn't have a holiday. I worked, but like the rest of you, I have so many partners call me to predict what's going to occur that I have to be careful on how much time I give them because I got a lot of fucking work to do, right? So vet those guys out because I'm not kidding you, they'll be on the phone an hour and a half with me if I added it up. And so don't worry about predicting, just go to work, whatever it is, it'll lead you to a good result and make sure you're healthy. Make sure you're keeping yourself healthy.
That's a huge part of it. As it gets harder and you separate yourself from the pack, if you're not healthy, it just is hard, you know.
And none of us, you know, you all have family. None of us, all your friends that have jobs, you can't relate to. You're in a different sphere. Those people aren't anything relatable to what you're going through. Their opinion is just that they have a lot of certainty and guarantee, and they're not in your world. And you are a true hunter. Like you can create opportunities on your own. And any of those people. I think one of the things that have always told me is that, how's real estate? It was like from Millionaire, a guy who owns Northern Fruit Company is worth probably, I don't know, a lot, 100 million. He kept asking me, how's real estate, Jeff? And he never used me, but what he was really doing was not looking, he never said, how can I help you? Is there any way I could, does that make sense? He's a multi-millionaire. And now that I look back on that guy was just a piece of shit that I should have never even given time to. Does that make sense?
Yeah,
So
you
I-
gotta interview them, right? That's what I'm saying. You gotta interview them while they're interviewing you.
That's right. So that way, so now I look at it, I'm like, you're not worth my time. I'm not, cause that guy was just a piece of shit. I call those the good people now, though. They're the good people. And I'm the piece of shit. Okay. So a reverse psychology that thing. So, but just guard that stuff. You don't need it. And I get it thrown at me more and more. The longer you're in the business, the more people want to call and ask. And they're trying to predict. We've already gone through the recession because we've already been through it. They're just going to experience it. You and I we've been battling this and we'll get through it. There'll be a lot of change. There'll be a ton of changeover in this. And that's when we make our money, is on that changeover.
Every cycle, right, Jeff, every cycle, if you're an early adopter of something that is predictable, you have an advantage. And right now, for example, there's a whole crew of people that are buying here that can work from home. And the vast majority of real estate brokers have no plan to execute on this new demand that has never existed.
Right.
That's just increasing at an increasing rate. It's like, pretty soon it'll probably be, oh, well, of course there's that. Kind of like first time home buyers are a thing, right? Well, of course there's buyers that are living here and working online. But we haven't had that very long yet, so not very many people have a plan or a system to execute on that because you have the knowledge that they want. They can try to use their real estate brokers all they want in Seattle. It just doesn't work very well for them. Not when it gets dicey. And if it gets dicey, that's the opportunity. So to me, it's exciting. I mean, it's kind of like you have a secret. You have a secret sauce or something. And it really is just about the work. It's really just about the work. And the work isn't about more hours. It's just about more effective time. And now that you guys, and I really sincerely, Jeff, thank you for the compliment because they earned it. It's impressive to watch. I haven't seen this in a long time, like in a cohesive group like this, that are working as individuals but came together. That's
awesome.
Part of your team as well, right? Brooke, who's on there?
Yeah.
all the people that worked it, yeah, all the people that worked up there, just together watching. Not even about the result. It's not about that. It's about, I tell people my kid, my son had to go to the Marine Corps for 5 years and work in excavation for 3 years. His first day with us is today. My daughter had to go to school for 7 years, ended up with $250,000 in debt to get a job as a doctor of audiology for 69 grand a year in Valley. Now she's making more than that, but the time on task over time to get to a place where you can be successful, the expectation of that sometimes is too fast. Especially if you're unwilling to work, but you guys are willing to work. And if you're willing to work in a market where most people aren't, and you have some mentors, and you pay attention, and you practice what you're taught on live bodies like you guys all did, that's the iron sharpens iron. Everybody says that damn cliche, iron sharpens iron, like it's fun. It sucks. It's conflict, it's resistance,
It means losing sometimes.
yeah, like you get
Like
beat up.
Losing listings to other people who
Yeah.
did a better job than you did.
Make a mistake. Oh, shit. Learn, I've not learned really much from being successful. I mean, I think everybody can say that's ever failed. Man, your lessons that you learn are mistakes, failures. And you need those to survive. If you're unwilling to do that, you fall into comfort zone, and comfort zone is where the growth goes to die. And that's where people that don't act like that excel. You see, Rhett Crow knows nothing more than Jeff Holman or you or me. He just got better at it because he worked hard. He just worked insanely hard. And he got real focused on a niche. And he excelled at it, because nobody else would work as hard as Brett. But he's not like some Einstein, he's just a guy. I mean, now he's refined his skill sets to an assassin level and beyond anybody that's ever sold real estate in this area. But he didn't do it because he came from like some ancient genetic code that made him superior. No, it's called work ethic. It's really weird. Now he's doing 50 million a year, probably 70 million this year on his own with one assistant. How? Oh, he does it every day, consistently. He's not flying. He's not walking on water. He's just lead
He
generating.
puts on his pants one leg at a time, just like the rest of us.
And he has 3 kids now. So, you know, I did tell him this year, I go, hey, nobody's immune. So be careful. If you have a family, you could retire. Just be careful. But he's such a natural born killer that that's addicted to. And that's what, you know, what I ended up doing is that's what hurt me. Like I got so addicted to the hunt, I just kind of lost track of some stuff. You know, and I paid the price. And it was ultimately my choice to do it. Like it was me. So the humility had to come in a different set of order. I didn't have a mentor like Brett had me and Jeff and Keith, many other people, Alice in our office when he was 21 years old. He had a group of people that were mentors.
That's right. He had a bunch of mentors that's a really important key is that he wasn't just randomly going to a group of people. Russ, you did give people opportunity, but he also had very good mentors, right? So.
Yeah, and he got lucky, you know, when that, yeah, I take advantage of that. And the lucky part is he's 6'4", could hit the shit out of a softball. And I happened to own a restaurant at the time, and I played some pretty serious softball games, co-ed softball games at the time. And so I said, here's the deal. He was the Olive Garden waiter in Spokane. I said, you can have a job in my restaurant. I had a rental you could live in, and I'll teach you how to sell real estate, because he was chasing a skirt in Chelan from Spokane. And he was here to stay there. And I said, but one condition, I'll do all that for you, but you gotta play on my softball. Good thing I had a softball. You hit the hell out of it. Anyway, that's all I got. Jeff, you got anything else? You guys?
No, thank you all. Thank you, everyone.
Thank you for coming.
Thank you.
Again?